In today's video, I will walk you through how to use stop limit orders on Deribit for precise breakout trading. A stop limit order combines a conditional trigger with a specific limit price. Instead of executing at any available price after the trigger is reached, the order will only execute at your chosen limit price or a better price. To begin, open your preferred trading interface on Deribit, whether you are trading futures or perpetuals. In the Order Entry panel, locate the Order Type drop-down menu and change it to Stop Limit. Next, configure the conditions that will activate your order. The first setting is the trigger price, also called the stop price. This is the price level that activates your stop limit order. If you are preparing for a bullish breakout and planning to enter a long position, set the trigger price slightly above the key resistance level. If you are preparing for a bearish breakdown and planning to enter a short position, set the trigger price slightly below the key support level. After that, choose the trigger type. From the drop-down menu, select either Index Price or Mark Price. Avoid using Last Price, since an isolated trade on Deribit could trigger your order before the broader market has actually broken out. Now set your limit price. This is the highest price you are willing to pay for a long position or the lowest price you are willing to accept for a short position. When setting up a breakout trade, leave a small buffer between the trigger price and the limit price so the order has a better chance of being filled during a fast move. For a buy breakout, place the limit price slightly above the trigger price. For example, if Bitcoin is consolidating below $90,000, you could set the trigger price at $90,050 to confirm the breakout. Then set the limit price at $90,100. This means that once the index reaches $90,050, the system will place a buy limit order, but it will not execute the trade if the price immediately moves above $90,100. Once your prices are configured, enter the amount you want to trade. Input either the number of contracts or the USD or crypto value for the position you want to open when the breakout occurs. When everything is ready, click Buy if you are trading an upside breakout, or click Sell if you are trading a downside breakdown. Review the confirmation window carefully, and make sure the order settings match your trading plan. If everything looks correct, confirm the order. One important trade-off to remember is that while a stop limit order gives you full control over your entry price and protects you from high taker slippage, there is still a chance that your order will not be filled. If the breakout is extremely aggressive and the market moves completely beyond your limit price before your order can be matched, the order will remain on the book as a standard limit order while the market continues moving without it. Thank you for watching.